like-minded people. I need to build a team. We need to build a team.
Hi guys, welcome back to the
I
Inside
think,
Outside podcast. As you see, Ahmed is already motivated
oh,
to build a team. The
I,
issue with
yeah,
one issue with this podcast, guys, is me and Ahmed talk so much. If we were able to sum up every conversation, I'm telling you, we
very
would
true.
have 24 hours worth of video to watch every single week. It's incredible. Like before this, we probably just had a 30-minute conversation, and it's great, right? We talk about a lot of things. Now, all right, the consensus of this video, we have nothing to really talk about. We're just here to talk
It
and to
started.
give our opinion, and again to have conversation, right? So
Yeah,
right now, I'm going to bring up a couple of topics, something that's pretty solid. Now, Ahmed, first thing I want to bring up is credit cards, because a lot of people are, your boy Rav really likes his credit cards, but
we
apparently
talked
you've
about
heard,
this in
yeah,
private. This is solid. Yes, I
exactly.
like this.
And in the U.S. right now, one of the key talking points that Trump is trying to implement right now is he wants to put a 10% interest rate on cap on credit cards I'm essentially guessing 1 year is what he is trying to do. Now, a lot of people are telling you, oh, this is good, this is bad. But what is the real answer? Well, guess what? You're lucky you're watching the podcast because we're going to tell you what the real answer is, all right? So, Ahmed, do you want to take it from here and go for our first, pretty much let us know what we're talking about?
Um, so from what I remember, the conversation we had prior to being on the podcast is that Donald Trump is going to increase these interest rates on this
The lower,
credit
lower,
card.
lower, lower.
Isn't he going to? I thought he was going to increase the credit card.
No, lower, lower. Here, okay, I'll go over the consensus. Again, like we mentioned, guys, we give you direct advice, so our direct conversation, so we don't plan this. This is nothing, because we like to be authentic.
Yeah.
So,
We're
all right,
talking about debt forgiveness. Is that the same conversation? We're talking about
which
the idea of how there's a false predication that people believe that student loans can be paid off, and then
no,
we
yes,
use that.
yes. So Ahmed is correct, but
And I still
but not
believe
that portion. But we will get to that portion too, because I want to bring it up. So the
okay.
credit card situation that's right now is a little different than the student loans, but we're relating it because that's the conversation that me and Ahmed are very spoken
They
about.
all tie in together. They all tie in together, though.
Exactly.
Debt bubbles exist, and liquidity is
Hmm.
something that you need to understand.
Yeah.
And Rab, I think you could.
So
Yeah, I
guys,
didn't.
yeah, no worries. Here, I'll go over this and then give me your opinion. So, guys,
Yeah,
when
yeah.
you're talking directly about, all right, what's going on? So Donald Trump wants to cap credit card interest rates at 10%. So if you've ever checked your credit card out, you'll see the majority of credit cards at 29 or sometimes even 30%. It's very, very high. So that means if you carry a balance, you're going to get destroyed over the long term because the amount of interest that you're paying, it just does not make sense for the amount of money that you could borrow. 30% is very hard. So unless you have access to your boy Jim Simmons and you can invest that money for 60%, there's no reason you should be taking out a 30% loan, right? It makes no sense to do it. So what Donald Trump is suggesting is he's going to put a 10% cap. He's right now saying for a year on credit cards because it is going to help the end consumer, which is true. It's going to help, but it's also not going to help because people don't realize hidden costs of doing stuff like this. So here's the question to you, Ahmed. Which version of the economy, we're going to talk about the extremely rich, the middle class, or the extremely poor, do you think hold the balance on their credit cards? We know that all three of them use credit cards because they like credit card points. But who do you think, if you had to take a guess, it's going to be a very hard guess, right? Which version of the economy relies the most on credit cards and which ones are most likely to keep a balance?
Uh, is this like a trick question? Because I feel like
It's not a trick
you could
question.
argue
It's not a trick question. It's simple.
you could almost
What's the
argue
first answer you think?
people-
Just what's the first answer you think of? Who
I would
keeps
think the poor.
the poor? Exactly, and that's true.
Yeah.
See, Ahmed's trying to figure it out. He's like, the answer is like too easy. No, exactly. The answer is so straightforward.
The reason I'm kind of the curveball for me is because the rich actually leverage debt.
Yeah. But they not credit card debt. Credit card debts. I mean, even I've leveraged credit card debt. But
Interesting.
but
Yeah.
majority of people who are going to carry a balance, especially for a long period of time, are going to be people who are unfortunately on the poor end. So you're like, oh great. So Donald Trump is trying to.
You've done this, and I think you should explain this.
Yeah.
You've used the rewards. You've gamified finance
Yes.
and rewards mechanisms to create capital, which is amazing.
Mm-hmm.
But continue down the
Yeah. So with these credit card interest rates right now, you're like, okay, great. If you lower them from 30% to 10%, you're essentially saving the poor people a lot of money. You would assume so, but you're actually wrong. And guys, this is where like reading a title does not exactly help you. So Donald Trump, again, whether you love him or hate him, he is doing this for one reason, and that's because the midterms are going to get relatively close. They're not far off. They're less than a year away now. So in order for you to build credibility, you need to make sure the titles showcase that you in a good light. That's one of the positions that he's in. And remember, midterms make a lot of change and a lot of decisions. So a lot of people in this economy, whether you're in the USA or Canada, are struggling right now. A lot of them are struggling, right? And so a lot of people are going to put blame to where blame's at. Some of them are going to misdirect blame, and you want to make sure that you're on the opposite end. You're not going to be the one getting blamed on. So by Donald Trump putting a title like, hey, I'm going to lower him to 10%, sounds great, but it's not. Now, here's the reason why it's not. Ahmed, I'm going to explain it to you. If you cap interest rates at 10%, you have to look at, okay, which companies have these interest rates and why do they have them so high? So first thing I'm going to tell you this, there is no cap on interest rates for credit cards. That is unregulated. Now, is that an issue? Yes, it definitely is, because 30% is too much. But if we look at the bottom finances of these companies, outside of companies like American Express, which are full banks, they're not just credit card issuers. And we're just looking at credit card issuers, their profit is usually 25%. So if now you're like, okay, we're going to now take off 20% of the interest you can make, their bottom line is going to drop substantially, right? So you need to make sure that if companies want to obviously grow, they want to do better, they have to, and we want to lend credit, they need to make sure they're making their money's worth, right? Now, here's the issue. Did you remember why I said if they want to lend? What happened during COVID that a lot of people talk about? I think I've heard this on like the PBD podcast before, but not a lot of people know this. In the USA, during COVID, people's credit cards got declined in their credit. So if you had a $30,000 credit card, do you know what they did? The banks automatically changed it to 20. The same thing happened with lines of credit, because remember, these are functioning credits. These are not credits with a one-time like guaranteed you have 30,000. It's whatever the bank deems it at the time. And why did they do that? Why did the companies do that? I'll tell you why. They did it for a large scale because they knew that people were more likely going to borrow money and not be able to pay it back because how tough COVID was. So they wanted to downside the risk by lowering the amount of credit. Remember, credit card issuers, especially ones that are just using credit cards, they only make their money when you utilize this credit. So if they're literally taking away back from you, even if you're a good borrower, because they're too afraid that, hey, we're going to lose money here.
You're setting a leverage trade against you.
So now here's the question. If you make it that you can only get 10% for interest now, do you think a lot of people are going to still default? They do. A lot of people still default, right? If 2 or 3% of people who are going to use credit are going to default, and then you're not going to get anything from it, you have to make sure you price that into the equation. Guess what all these credit card companies are going to do, and credit leverage companies are going to do? They're going to stop leveraging credit. They're going to stop giving credit to people who have 700 credit score. They're only going to give to the people who have 800. They're going to stop giving it to people who have less than 650. Like, you could think about it like this.
Yes, this is a very complex concept.
Yeah. Now, what hurts more? Yeah, what hurts more? Paying 10% interest, right? Or paying 30% interest, or having the ability to have no interest? And you're like, okay, that's great, but what if you have no money? Right? What if you need to utilize credit cards to feed your family at the moment because times are tough? Like, one thing you got to understand about credit, whether credit card interest is really high or not, by having most people don't have 1 month's worth of salary like 1 month's worth of their salary ready in their account, so they don't have the abilities to finance their lifestyle. So now, if you had a credit card, you're going to be throwing everything on the credit card because that's the only option you have. If you got to feed your baby, you have to do it somehow. So I'm not saying it's the best way, but it is a way. So now these companies are going to really be rethinking, who do we give out credit to? And so that's a very, very good question. And trust me,
during COVID was so to look at this from a multifaceted way, like multi-angular. During COVID, there was a quantitative easing in the form of stimulus checks in Canada and America, and there's a lot of liquidity being pumped into the markets to maintain its rate, because we had COVID caused all sorts of ripple effects that were economically to the downturn. Like people in real estate, like we've discussed earlier, they went through really harsh times because of these ripple effects. But from what I understand, banks will, and even investment firms, all these different institutions that exist within the economic biome. Biome is basically like a biology term where you have shrimp at the bottom, and then you have higher and higher organisms that rely upon the shrimps. But from what I heard from you earlier, what I think is a better way to frame this idea is that the banks will essentially thrive off of liquidity until it goes away. And when it goes away, they go for people that have different credit scores. They start to de-risk.
They want lending. Yeah. And you know what they're going to do? I'll tell you this. Yes, sorry.
I need you to further explain this in better words. There's two distinct extremes that exist where banks flip on and off this aggressive lending versus aggressively taking off the lending. So, in what environment? That's my best question I could ask you. In what environment do you think that they lend more and they increase that from 20K to 30K rather than what they did in COVID, or from
Where they
30K to
decrease.
20K lines of credit and so on?
All
What
right.
are the two extremes?
I'm
and
gonna
when do they
answer these
when do
questions,
they-
and I'm gonna give one more point, and then I'm gonna answer these questions because Ahmed, you
Yeah.
asked a very good question here because I didn't even go to the opposite. So now remember, banks still have this money, right? So if you're a credit card issuer and you still have money to lend, and now you're too afraid to lend it to the people who may not be able to pay it back, who are you gonna lend it to, Ahmed?
the bonds?
Yeah. No, well,
Government
yes.
bonds?
So you're getting into the investment side, but let's just say they had to give this money as credit. They're going to give it to the people who are the richest, the people most exactly the people with the assets. Because
Interesting, man.
exactly
Demographics.
exactly because
Demographic shift.
those guys are the because when you're trying to take money from poor people, if they don't have the money, you can't do anything. You just can't. So now you lost all your money trying to chase a 10% yield when, as Ahmed mentioned, you could go get 5% yield or 6% yield in treasury bonds, or you could put it into the S&P 500.
I don't want to cut you off, but this you just sparked a point of interest that I need to tell you before you continue, because you're doing a great job explaining. I think you guys should listen in. But what would you think would happen? Because when you go to a poor person and they default, they don't pay the payments. There's this thing called bankruptcy, and a lot of people strategize bankruptcy. Donald Trump being one of them. What would happen if the mass collective, the entire economy, like everyone in the economy, were to default?
Well, the whatever bank lend the money is fucked. They are done. And remember, this is because of because of this exact fact, people, and they're like, okay, I'm not making the money that I was supposed to make in this, so I'm not going to lend money. I'm just going to go invest into the stock market, or I'm just going to go buy treasury bonds because that's way less risk than this person will pay me back. But let's just say they had to lend money, then guess what? They're going to lend it to they're going to give $100 million line of credit to the people who have $100 million worth of assets. So by cutting the interest rate to 10%, you are now taking away money from the poor people to the people who are on top of the chain anyway, because those are the people with assets. They're the people who can afford this stuff. And even if they can't, the banks have a good
bandwidth to pay for it. Yeah,
exactly. And that's what's going to happen. So, and I'm not trying to say that you need that, oh, we gotta keep interest rates high, like for credit cards. No, there definitely should come down. 100%, 30% is way too much.
That's what Trump is doing. He's reducing them.
Exactly. He only wants to do it for a year, right? But this is not going to happen anyway. I'll tell you that truthfully. But I'll tell you guys
this value. 1 year's a long time. That's what you're saying.
Yeah, but like this is what I want to mention to the viewer so that you guys understand properly. Okay, looking for a handout way to get rid of debt is not going to work for you. You need to do it yourself. Don't rely on the government. And here's one other point, guys. One other point that you have to understand: when rich people have assets, they're going to be able to get lending no matter what. People want to lend to them because they know that these guys have a high likelihood of getting back their investment, whether it's through them or the assets that they have. But when they have to do it the otherwise, they're not going to do it. And guys, understand this portion. Now, Ahmed also asked me, in what cases do they increase credit? I'm going to tell you the funniest story. This is a personal story, guys. This is a personal story about your boy Rav. So I had a big, I'm not going to mention what it was, but I had a big lifetime event. Okay, very good. A lot of people do this big achievement award, and a lot of people hope to do it, and I got very lucky. But guess what? It was a very expensive ordeal. So guess what happened? I was throwing everything on the Amex to get the Amex points, with all likelihood of me paying off that credit card, because I knew when the statement comes, I was gonna pay it off 100%. But let's just say that month I spent about $25,000. And not business income, that was personal. A lot of money. Don't get me wrong, I'm not saying that's light money. That's really expensive. And to pay for personal, crazy. I never would have done it. Never in a million years. But I had to do it for this life event. So let's say it was done. My Amex called me. American Express called me.
More.
Hey, no, Ahmed, no. They knew how much money I was making from my various businesses, but I've never spent like that. So they got scared that I wouldn't be able to pay it back. And guess what they did? They lowered all of my credit cards, because I have 5 credit cards with American Express.
You turned from an asset in that moment to a liability.
Because they treat
you like an investment.
Exactly. Because they don't want you to get to that point where you're paying crazy amount of interest when you can't pay back the actual debt. Right, so they're like, wait, this guy went from spending like 20 grand a month to 50 grand in 1 month. Oh my God, what's going on? Right,
very similarly to investment firms. One of the
Yeah.
go super high risk, they actually have safety rails and
Yes,
that they
and
activate it. That's
so
interesting.
they lowered my gold credit card had a 50K limit on it. They lowered it down to 30 grand, so I had less than like $2,000 worth of wiggle room right away. Once they sent me this email and they gave me a call because they called me and they said, "Hey, did you by any chance lose your job?" Like they asked me questions, bro. I was like, "Yo, man, I'm trying to enjoy myself right now. What the hell are you talking about, right?" And nobody called me for fraud. They knew it was me spending this money. Okay, so nobody called me for, oh, is this fraud? They thought that I was getting way too high risk, so they cut down my credit. And at that moment in time, because of all the stuff that was going around me, I could not call American Express and just tell them, hey, I look at your checkbook. I just paid everything. The moment I got that, I put in 20 grand out and paid off the credit card. I paid off the credit card right then and there, right? Because I was like, yo, man, why these guys like hunting me? And guys, don't get it wrong. American Express is actually one of my favorite companies. I own so much of their stock because their customer service is the best. But they have very good risk evaluation, apparently, right? Because if I couldn't pay it back and I just took that money and just messed off, what were they gonna do? So pretty much as soon as I was done, this it was about 2 weeks later, I gave them a call and I'm like, hey man, like if you guys check all your books, I paid everything off. I was just I just had a lot of expenses come up because I'm doing this event in my life. And then they were like, oh yeah, we're sorry, it triggered our review board and we have to do like a manual review. So I had to go do this manual review. I had to give them my a bunch of different forms. And guess what, after I gave them my forms and they realized, wait a second, this guy's now making triple the amount of money that he was making last year. Do you know what they did? Ahmed. They raised
They
my
opened up
from
further.
50. And 2 months later, they brought it back to 50. 2 months later, they made me 150,000. So right now on my gold credit card, I have a $150,000 limit, right? And that's insane.
Rav is explaining, and I tried to make it black and white.
Mm-hmm.
I said, when do they go lend you it, and when do they take it away from you? And I guess what you've just explained in the most effective way, I think it was really effective, is that they go case by case and they monitor rates of increase of wealth. Or
Yeah,
that's what you said.
American Express is really known for it. Like they track you viciously, right? And so because a lot of people are like, yo, I had a buddy. I'll tell you this another story. He was buying everything from American Express. So imagine he was going to the Apple store, and because this guy's one of the people that nobody likes, the resellers, okay? And the new iPhone drops, he buys 100 of them on a credit card. So it's crazy, right? He has so many of them, and do you know what American Express did? They just canceled his card.
Why?
Because because he was paying everything. But they said
everything's
it's
on time.
too risky what you're doing. Because if they stop resellers, or if somebody steals his stuff, or if he can't pay it back because of blah blah blah, this is business. This is not a good business. It's one of the businesses they don't support reselling, and or his type of reselling. And so they canceled him, even though he was a great paying customer, right? So banks, like if banks want to milk me, they're like, oh, I can't wait for this guy to go into debt 30% at $100,000 on a credit card, right? They would have loved me, but they don't. They don't because they have a high likelihood of not paying it back.
It's the perfect pre-context conversation that you're having right now. Sorry to cut you off. Let's talk about student loans and why student loans are positioned to. Yeah, so
Ahmed,
if you become a professional, you get an income, now you can pay the debt off.
So Ahmed, this is literally perfect, okay? So we're going to go into why I'm telling you this is not going to happen. And Ahmed is very intelligent in this. He understands this fully. So I'm going to get Ahmed's help to explain this. So guys, what Donald Trump is saying right now is Donald Trump has said a lot of things. How much of this thing has happened? Not a lot. But now when we come into this, remember Joe Biden, the former president, didn't he say in his companionship, we're going to get rid of student loans, we're going to do blah, 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 we're going to get paid every... Yeah, false promises, right? These are literal things that they said. And guess what? He did this knowing that he could not do that because it's not his choice to make. It's other people's money and other people's money that they lend.
I need to frame this so that the viewer can get
understand. Go for it. And again, guys, we're not hating on Joe Biden. We're just telling you that people say stuff to look good.
We're assessing Joe Biden as part of a grander system of debt and money and liquidity. And if someone like the president of the United States, which is in a position of high debt, $38 trillion and growing, and with this is what the banks do on an individual level, and this is what you could do when you interpret governments on the larger macro. They have $38 trillion of debt. They make $6 trillion a year. And they promise you that they're going to get rid of
$2 trillion,
the largest debt bubble period. The largest debt bubble period. So this tectonic plate, when someone tells you, "Oh, I'm going to pay off the largest debt bubble," you're going to have to think about: is he capable? And if he does, what are the repercussions? And if it's possible, is it even to be considered?
Mhm.
Rav, explain as to why there's an impossibility.
Okay, guys, here's the reason you can't do it. First of all, they don't have the money to do it. To pay off that amount of loan, guess what? Because what are you going to tell the people who lend the money, the banks? So RBC is sitting here, Bank of America is sitting here with all these student loans. You're like, nope, deleted. Wait a second, we gave that money. You're telling me we lose all that money? And so that's going to kill businesses. So they're not going to do that. That's not feasible. That's not possible, and that's not constitutional at all because you're just
Let's say
stealing
they
money.
enforce it through the law.
Okay.
Let's say they actually go about and enforce it through the law. They break
Okay.
the rules. They bend.
Yeah.
They bend
If
the
they
RBC owned money.
Mhm.
What would happen to RBC? RBC would go into debt. It's because they were
They're
they
screwed.
required the
They're
cash flow, and
yeah.
then RBC defaults, other banks default.
Yeah.
There is no way.
And guys, listen to this. This is something that I want you guys to understand. How many people do you think Joe Biden indirectly destroyed and directly destroyed because of this false promise? Let me get it straight. If I was a kid and I knew for a fact that the student loans were going to get canceled,
Yes.
do you think I'm going to pay another dime? I mean, of course not. I'm like, yo, man, I got 70 grand worth of debt right here. They're wiping it off in 3 months from now. Why on earth would I start paying this debt? I'm not. So guess what? They didn't. But you know what doesn't stop just because you stop paying? The interest rate. Interest rates on student loans are just as bad, 20, 30%. So now all of a sudden that money is growing at 20 and 30% in 1 year because you haven't paid anything off. You might not even paying your minimum payments because you didn't care, right?
Rather interesting predicament. So the job markets, from not my opinion, not insider outsider podcast opinion, but from the Statistics Bureau of America, came out and they said by I think 2027 or 2030, all the first year jobs out of university are going to go away. They're going to dry up.
Mm-hmm.
And so you have a huge part of society reliant upon student loans, and they're kind of promising that when they get the degree, they get a job and they pay that off.
Mm-hmm.
If we get a disconnect anywhere in this,
I think it's already happened. But yeah, yeah, you're screwed because that interest rate does not wait for you to get your job. That interest rate, it literally, and I'll tell you something funny about the UK because the UK they actually don't start forcing you to pay payments until you get a job, but that interest rate still keeps going up. Like guys, you have to understand, this money came from somewhere, whether it was a business or organization or even the government. Just think of it like this: if the government in Canada was so chill with letting you chill with your student loans, then why the hell are they so much after? Right now, they're after 80% of the people who got served. they're going after those people and they can't get the money. So it's like, oh, why can't the government just let that money go? Because
there's so much contradictions when you come to listen to the government say, I'm going to bail you out. Look at the money that's being paid, not into our financial integrity, but outside to the Ukrainian war effort. Like there's so much money that's being wasted. You know what I'm saying?
Yeah.
And Rav wants to eradicate all these problems. We talked about Peter Lougheed and financial strategy, but
yeah. And again, guys, Ahmed's point, just to put it aside, is we're not saying don't send money to Ukraine, right? We're just saying you don't control where this money is going.
It has nothing to do with serving or having an opinion on external affairs.
Yeah. You don't know where this money is going, right?
If you're drowning, I do not expect you to save someone.
Yeah,
and you shouldn't.
And they're not. And they're not. They don't have the calls to make. And even if they wanted to, they couldn't, because remember, that money is somebody else's money. A bank loaned you that. Families loaned you that. People loaned you that. So you're going to take away their wealth because, this was an asset tool. It's like breaking the trust completely, right? It's like tomorrow if the dollar, they decide they're like, hey, the dollar is only worth $1. Like you can't just make up stuff. That's not how the actual constitution works, right? And so it's a very interesting point. But yeah, guys, this is why student loans are not going to get canceled. I'm sorry to tell you, if you guys spent a lot of money on university or college and you have a crazy shit ton of loans, that sucks. It truly sucks. But nobody's bailing you out. That money's going to stick around.
One question I think you guys should get from this the one question that you should be constantly asking yourself for any value proposition, when it comes to university education, when it comes to business that you want to invest in, when it comes to prospecting, anything, you have to see when it's very difficult to understand the product. Let's say someone's trying to sell you something and they tell you, oh, there's actually nothing to buy. When that is the case, you are the product.
Yes,
and right now, if you're in the student loan, you need to look through this perspective. Am I the product? Yes, you are.
Ahmed.
You're going to be 30% interest.
Yes.
You're going to pay.
You're going to get fired.
You become the product rather than the consumer.
Of course. And also, let's not forget, like the job, like it's not crazy that the economy's so well off that you just have all this money that you can just spend on something. You can't, all right? And so you're like, oh, I might make the economy better by just taking this money that people are going to use on student loans and do this. Well, there's also not better. That's still money going to the economy, right? Now, let's forget about this because I think we made the point very much across. Your student loans are going to stay. Your credit card interest rates are going to stay. They're not going to go away. And again, remember, even if Donald Trump does this, enforces this, like let's just say somehow it happens, it's only for a year. You're
So
still done.
I really we need to get right to the sauce.
We need to figure out
Um,
what we're gonna do. I'm gonna just tell you
if you're
what
not,
I'm gonna.
exactly,
All
if
right.
you're not reliant upon this government bailing
Yes.
you out,
What are you gonna
and
do?
you want to always take advice from someone you aspire to be like, you have to find someone, either like a mentor or someone that is in a financial position that he has his financial horses ready for
You
war.
need to gain skills and abilities to help you grow. You have to stop
Yeah.
because trust me, if you're
What's the bare minimum? Let's start with the bare
yeah,
minimum. What,
okay.
as a person in society with
I'll,
student
I'll
loans,
tell you what
what's
the
the
bare
bare
minimum. I'll
minimum?
tell you what the bare minimum standard is. If
Yes.
the interest rate on your credit card is the dictation between you being able to save money and not save money or losing money,
Yes.
you have a bigger
Yeah.
problem on the boat. It's not the interest rate; it's your ability to make money. And the
Okay,
only thing,
let's say we're this deep, bro. What am I gonna do as a not theoretical, a practical means?
if you're like drowning in debt,
Let's student loans, debt,
yeah,
whatever.
okay,
How would you start to rebuild something from debt? How could you
okay.
start to
Don't
bear into
rely
this?
so stop paying for the thing that's not working. That's the first thing I would do. Stop
Yeah.
paying for the thing that's not working. If you're going to university or college, guys, I highly recommend it because again, knowledge is great, but you got to make sure the degree you do is worth it. For example,
Yeah.
this is just something.
Shop around, yeah.
Yeah. Ahmed, this is just it's a non-part, like this is a non-popular opinion. But university was not meant for everybody. University was
No.
meant for very high elite people usually.
What is the historical origin? And this is
It's
exactly what
it's
you're
elite,
breaking down
but
as
the elite people were supposed to be getting really high-paying jobs that were really really good. I'm
Why?
talking about doctors,
What-
engineers.
What's the perspective
Yes,
prior to university
but now
becoming
those jobs,
commercialized?
yeah. So now those jobs are all taken away, right? So then what does the
Yes.
university do? What does a college do? Because it's a business. It's going to start making degrees in something else. And obviously, some of those skills are going to be in those degrees that people require for certain jobs, right? But when everybody has the degree is worthless. The degree is the baseline, right? It's like a high school education. Everybody has it. So
Let's
if
talk in terms of let's say Bitcoin.
wait, okay,
I really
I'm
like.
just gonna finish this point, then we'll go to that point. But
Okay, I guess.
yeah, it's all good. It's all good. This is a great conversation. I'm loving it. But
Yeah.
so now let's say for the position that we're in right now, where you're in university, figure out, is there a career pathway in this? If you're gonna go look at poli science, what is poli science? Nothing. So what am I going to use this poli science degree for, right? I'm not saying if you're in poli science it's useless, but you got to figure out what's the next step. And it can't just be, I'm going to use this degree to get this other degree, so that I can go eventually get a job that's going to pay me 100 grand. You're going to die by that position. The only thing you can do is look at it on a forward notion. Hey, in 5 years, it looks like right now, nursing, it looks fantastic. You pay a lot of money, 100%, and then you go into something that definitely is union based, that definitely has a lot of money in it, that definitely looks like that the healthcare system is getting a rechange. And guess what? Nursing and doctors are going to be a very big part of that. And then you make your decision from there. I'm not saying nursing is the right way. I'm just saying if you have to look at something from the inside and outside, insider outsider podcast, you have to be truthful with yourself. Don't give it chance. Don't sit here today and say, hey, I don't know if this is going to do, but I'm just going to do something because I don't have anything else to do. Don't do that. That is the worst mistake you can do.
This is what you're giving is perfect for. I'm gonna
Do something
reiterate
purposely. Yeah.
I'm gonna tell the viewer as to why I bring up Bitcoin in the
Yeah,
right
I actually
before
do
you-
want to hear this. Yes. Let's hear it.
So there's this thing called asset maturity, and there's a bell curve, or there's a linear chart that you can use to empirically assess something when it comes to early adopters and how much leverage they get as early adopters and late adopters, and how they actually pay the leverage that the early adopters get. So if you're in line, you get you get Bitcoin first. You get to benefit when it comes to time, money,
get to reap
value,
the
or value
rewards.
proposition in general. What I'm trying to say is you could break anything down into individual units. Like physics, there's newtons of force. But when it comes to time, money, value metrics, you could break it down into individual units. And what you talked about kind of sparked this conversation that I had internally in my brain of university used to be only for elites for a reason. because if you treat university as Bitcoin and you interpret it through the lens of asset maturity, during that time frame, it was early adopters that benefited from university. But now, as society, on a globalized scale, has all become educated, things like a computer science degree you start to pay the early adopters more so than you pay yourself when you go and enroll in these. So when you shop around, when you form value propositions for the degrees that you're going to get into, you have to understand that when you do get into the job field, there's going to be a certain you have to perceive it from early adopter or high saturation in the market. If there's too many nurses, you're not going to get the job. You're not going to fit
Perfect.
into
I'm very happy you said that. I'll continue.
but the key thing that you need to use right here, the framework that I'm using, that you need to understand to view things in this perspective, is asset maturity. Where is the assets, whether it's education as an asset, whether it's interest rate, whether it's credit card, leveraging debt. You have to look at things from where, in retrospect, to a timeline. Are you an early adopter of something? If you're buying Nvidia right now, good luck.
Yeah, good luck. I would say the same. Ahmed, that was beautifully worded. I'll just add to it a little bit more. But truthfully, there's not a lot of ways to make that point better, right? Like either you get it or you don't at this point in time. We've said it as much as we could. Like the truth, like you can only kick a dead horse so many times, right? As I mentioned, because it's not going to move. It's not going to do anything. Guys, university skills and college skills are very important as long as, again, it's in the right position for you in your life. If you see that, hey, there's 100,000 new nurses coming and there's only 40,000 jobs, do you think you should be the 100,001 nurse? No, you should not, because you are going to literally put yourself in a predicament where now you have crazy amount of debt. You have a lot of knowledge that you cannot use, and there is nothing more pointless than knowledge that does not benefit you. And so that's why you have to look at it. Like if I'm being honest right now, if I was 18 and I had to go to university right now, I'd probably go to a trade school for electrical, or for electrical engineering, or for just becoming an electrician or plumbing.
Why do you have this understanding?
Okay, I'll tell you.
You have a data set.
All right, let me tell you. Are you ready? Right now, no humanoid robots are even close to being able to be produced, right? And obviously they're going to be. So being an electrician is very promising because buildings still need to be built. Mainframe still needs to be mainframed. Everything needs to be done. So everything, including electrical work. Now, once robots are here and they do electrical work, guess what? It sucks. But guess what? Then I'll be the one building the robots, because you still need electricians to build the robots that can take over my jobs. So if I look at it in a lens like that, and it takes me 2 years to become an electrician, obviously it takes me longer than that, but it takes me 2 years to be able to start getting work now. You're in a really solid position where you know that your job is very secure because there is already a lacking of electricians, right? Same thing for plumbing, right? In Calgary, a water pipe just broke again. I can tell you something, it's probably a really good idea to be in the plumbing field now, because guess what? Calgary is probably going to spend a lot of money in the near future trying to rebuild their pipelines of water so that, this position never happens again. And do you know who has to build them?
Yes.
Plumbers, and not just regular plumber. You can't just be a plumber off the street. You need qualifications. So that's where the important part is. And guys, like how I think about Calgary is like this. When the least time you want to invest in something is when everybody else is investing into it. But when you do want to invest in something, when something wrong happens, because they'll fix it. Exactly. So in Calgary right now, a lot of people can talk about how bad these water frames are. They're supposed to last 100 years. They barely last 60. They barely last 50, whatever they want to say. The thing is now, Calgary is probably going to have the best water system in the entire world, because we know it's a key point of issue and we're going to go fix it and direct it right away. And to fix it, you need plumbers. So there you go. Now you know that, hey, plumbing is probably going to be a pretty solid future here in Calgary. And that's how I would make my decision. Nursing is another one, right? The Canada system is like 8 hours of a wait time. So how do you fix that? You have more labor. You have obviously more beds. You need a lot of stuff, right? For those beds, guess what? You need more engineers. You need more electricians. You need more plumbers. You need all that stuff. But also you need nurses to fill those beds, right? So then you make your decision on this is good education. This is education that's going to give me knowledge to utilize my skills, right? Because remember,
there's different geographic concentration gradients that I need to mention. Mm-hmm. So being a nurse in a different country means different ROI.
Of course, travel nurses, of course. And then, like Ahmed mentioned, it's right there, right? But if your plan is not to be in Calgary, then don't look at the Calgary market. Figure out where the hell you're going to be. But this is where you have to plan, right? Ahmed, the main purpose that I'm having this whole conversation is because
you really want to,
the main purpose is this, all right? If you do not know what you're going to do, don't do something for the sake of doing something. That is the worst idea you can do, especially when you have to pay for that knowledge. It's useless. Don't do
I
that.
like how you
That's
say you're framing it. I'm not disagreeing with you. And I think that these conversations are always. I feel like they're fully refined by me and you. We're recursively building them, and
if something's free, by the way, do as much knowledge as you want a day because it's pointless,
so
right?
dangerous.
But if you're paying
You have to go
10
back.
grand a year,
Go
20
right
grand
back.
a year, you got to make sure it's worth it.
You have to go right back because you said you don't want to do this to yourself.
Yeah.
Self-inflicted harm.
Mhm.
But the best way you could further explain the problem is it's not always self-inflicted harm by itself. It is a mixture of self-inflicted harm. When you're 18, you come out of high school, or you're trying to form an identity, because that's the psychology at the time
You're
horizon
trying to figure out what
of
you're doing,
when you're
and
thinking,
you're scared that
who
you're
am
running
I?
out of time. Yeah.
And so what they do is they understand and they have the data on you. They studied you because they're waiting for an opportunity to gain leverage in a time money value formation where you're giving more than you know what I mean? You're taking less and you're providing more. And what they do is they give you an identity of, let's say, like biological sciences degree. They give you an identity through university, and this identity is it's a false value proposition. It tells you that you're going to be this highly regarded intellectual who has a potential to make money. But the reality is it's sold to someone that hasn't done their research. And if you don't do exactly as Raf suggested and search for a proper role to
Something
play
way
in
to
the economy,
utilize your skills. Then
you're going to get baited into a huge student loan, and you're going to have to continually rely upon the abuser to continue to, because what happens, you take biosci, and then you try and get into medical school, and
you're
then
going to be
still
ending up
based
working at McDonald's. Exactly. And Ahmed,
they squeeze you.
sorry, one thing I want to mention is
What
if
you
you do
don't want to do
bioscience, yeah,
is to perceive that this is only a self-inflicted dilemma of debt. This is also there's vectors within this. The people that are loaning you the money want you to get default. So it's both self-inflicted, as Raf suggested, and they're being predatory in the sense
also
that
like you and I have both heard of the stories that of people who have student loans for so long, and now they realize I've been paying student loans off for 30 years, and guess what? I owe more than what I owed in the beginning because they were only making minimum payments. Exactly. So
it gets even worse. Your mom and dad are like, this is what happened during my time horizon when I was a kid. People who got educated, got really, really good ROI, whether it's in value, not just currency. But
and guys, remember, it's just like I would mention, bioscience. If you have no plans with it, guess what? It's going to be a horrible degree for you to learn. The knowledge is not going to help you. But if
what would you learn today? What would you go and learn today?
That's what I would do. I said plumbing or electrical engineering. Right? Engineering is always going to be a profitable skill. Because again, it builds very logic. You have very good credibility with that, but you can maneuver in many different directions, right? There's so many different types of engineers. The problem is if you focus on something that's so specific and you have no idea exactly what you're going to do in that field, you're just doing it for the sake of doing it.
There's another larger scale problem. What's your best guess? I know you're basically guessing what I'm about to say, which is nearly impossible. It's a question that's kind of tough. But if you can guess this could be quite impressive. What is the larger scale problem that I would like you to interpret and see?
Over time, how AI is going to destroy your job, or if you can even
look at the larger picture. You talked about education. What was the origin of education? It was only for one class.
Yes, but like this is what I want to specify into that. Here, give me 2 minutes on it. I want to give you my total idea on this, and then I'll let yours idea. Okay. We are almost running out of time, guys. We got 40 minutes. It sucks so bad because there's so much knowledge to gain here. But when we're talking about elites, that's what the college was used for. It was to educate the elite so they could take high-paying jobs or high developed skills. Whether they're like, for example, you kings and queens would obviously learn something, whereas the peasants are not going to learn anything, right? Now, in this day and age, everybody has the opportunity to learn, which is the beautiful part. But remembering that obviously universities and college, who have the whole business model is to make money from you, may not have the best interest in mind for you. They're trying to sell you everything. So you have to understand that a lot of this is going to be noise. Don't hop into and I'm not the Indian dad here saying, oh, you got to be doctor, engineer. No, definitely not. Because in this day and age, an influencer or somebody doing OnlyFans is making 100 times the amount of money that these guys are making, right? But that doesn't mean everybody should go be an OnlyFans model. That ain't going to work out for you. What I'm trying to say is you got to you got to go and find the development in something that's going to be a good ROI. And so think of everything in terms of a ROI over 10, 15 years.
What's the best advice?
I'm going to give you two. And this is the last. This is the
So
last
one
path to
said,
billionaire.
be at the bleeding edge of innovation.
All right. That's so. Let's say three things. So the first thing is going to be just like Ahmed said, be in the bleeding edge of something. So if something is like medical industry right now, it's fantastic, right? So if you're a technologist who's creating technology for medicine, I think that's gonna be huge money. You're gonna use AI in your job,
Engineering,
and you're gonna make the money.
engineering,
Exactly.
yeah,
Engineering. Second thing is going to be the same thing we've been telling you this entire episode. What's that word? The word that I'm looking for right now is be purposeful on what you want to do, not do something for the
yeah,
necessity of doing it. All right. And the third thing,
yes,
guys, all right, the third thing and the most important thing is don't rush into any decision. After this call, if you guys watch this video and you guys are like even a little bit curious and like figuring out, should I do something? Should I not do something? Figure out the roadmap. Where do you see your life in 20 years? Where do you want to live? What do you want to do? How much do you want a lot of kids? You got to pay for them. Do you want a lot of money? Okay, great. So what career path should I do today that's going to allow me for the next 10, 15 years to keep my relatively job safe that I'm not going to be worried about? Well, becoming like somebody who's a welder, great amount of money. Yeah, well, no mechanical stuff can still do this. So should I go learn a trade school skill that's going to take me a year instead and then be able to make a lot of money? Okay, great. You know what? I like to create medical technologies, or I like this industry that's working about fat loss pills. Great. Now you learned some sort of science that you're going to be really smart in, but make sure that that's going to directly relate into what you want to do in the future, right? And guess what? We have literally the same tool that's taking away your jobs is here to tell you exactly what jobs is going to take. It's not going to be right away. When AI was initially happening, everybody was saying that the first jobs are going to go away are the hard labor jobs. The blue collar work is going to go away. None of that has happened. None of that is even close to happening. The things that got taken
yeah,
away are the most intellect jobs. ChatGPT is working on right now a full medical doctorate, or like a doctor AI. So it will be more
yes.
accurate than just searching your symptoms on Google, right? Now, is this going to be medical grade? Of course not. No one's going to let it be medical grade, but it's probably going to be even better than the doctors, right? Not saying to use it, but I'm just saying it's probably going to be better than
Yeah,
doctors. But
yeah,
now this is what you guys got to understand. All right. Be purposeful. Actually look at it and don't jump into a decision. And don't be like, oh, I'm 18. I don't know exactly what I'm going to do. Try a bunch of stuff. And here's one tip I'm going to give anybody who wants to do anything. If you're interested in something, just for example, if you're interested in robotics, there's a lot of volunteer options for any business that does robotics. You can literally go there, check it out, ask the people, hey, how do you think robotics is? Do you think AI is going to take this job in the future? Are you worried about the safety of your job? Do you think you're going to be doing this? And somebody who's in the field can literally tell you, no, I think this job's really safe because of this, and then you can make your decision from there. If you want to be a nurse, you might want to ask a nurse, how is nursing? Do you think that if I take 4 years to study this or do accelerated nursing or this, that is there going to be a job for me at the end? If you want to be a doctor, oh, what kind of doctor should I be? Oh, well, maybe this type of doctor doesn't even exist anymore because we've cured this. Oh, so this is that type of doctor. Or maybe I should become a medical researcher on the effects of fat loss, or this. What I'm just saying is there's so many opportunities for you to make the right decision. Just please don't do something out of the reason of necessity of doing it. I have so many friends, and these guys are very successful, but their degrees are useless. Like what I mean is they went to school and university and they had more knowledge of having friend circles and of day drinking and of fucking party tricks that they've learned than the amount of knowledge they've gained, and they paid 40 grand for that. So you can't do that.
Yep.
It's not a fucking viable option. And guess what? It's majority of people. Ahmed, you don't. You can tell me right now how many of your friends know that they have a job in the exact degree that they studied in. And if they didn't get it, maybe that degree helped them because it was a title. But guess what?
It's
It wouldn't have.
Rav is not just expressing this as, oh, my opinion of my friends from a statistical analysis. People that track this empiricism on what he just said. Most people don't work within their degree stream.
They don't. And so if you know that's true,
It's very telling.
you may as well try to figure out what you actually really like, what you're good at, and then learn that instead, right?
So here's I feel like you're giving extremely specific advice.
Mhm.
It's very, and I want to contrast that just so that the viewer gets a comprehensive interpretation of this. So when you say go become a doctor and understand what kind of doctor you are, not just the label of, not just the identity of a doctor, not just because the identity is used to lure you into that. You need to understand how. So Rav, I feel like the best way you would understand this is an interest rate or a credit card. Would you go into a credit card that's at like really high interest rate or a low interest rate? You want the low interest rate.
Wow, that's a very hard decision. Exactly. Yeah.
But the thing is, it's really easy when it's a credit card.
Exactly. But it's
People
really
don't
hard. Yeah.
people don't understand that you could reflect the same principles and ideas in education format, because education requires your time and effort, and you acquire money.
Yeah.
They're part of the same system. And what I really want to push here is that if you've noticed, the job market's no longer requiring a bachelor's degree; it's requiring a PhD.
Yeah,
There is
the
a
level
form of
keeps going up.
inflation. There's a form of inflation
Yeah,
that's
for
happening
education.
yeah, exactly. But what you need to, the reason that I'm gonna drive this idea forward is because I need to further express the idea that early adopters are the beneficiaries, and there's a certain point where early adopters and the ones that come after don't no longer benefit from leverage. They take on the opposite trait of the early adopters.
Mm-hmm.
They take on the negative consequences of coming in late, much like. And what happens is when society, even the poor people, get opportunities to get educated, and the pre-existing generation has been told and programmed that education is the only way, they start to take on the other side of the coin. They start to take on the late adopters. And what's happening on a societal level, a globalized level, is that people are going into education under the preconceived notion, the narrative lag of their parents telling them you need to get an education. Although you don't get me wrong, education, the idea is deceptive in the sense that you could educate yourself much like Rav does on a consistent basis. He understands the value that was being extracted by the early adopters. The early adopters, the very basis and the reasoning as to why they sent their kids to these universities, and they stayed very well interconnected within thriving economic, you know what I mean, social circles, is because they understood something that Rav understands very well. They understand that the very building material of wealth is in understanding stuff, in knowledge itself. But today, that has been repackaged and given on a mass scale. And when you give it to everyone, when you give education access to everyone, they become the late adopters.
Mm-hmm.
And the late adopters do not get the leverage. You're not in. So 90% of the degrees that you're getting have been saturated. People, they're way super saturated, and you're almost and this is what the statistics bureau, it's not my opinion, the statistics bureau of America has suggested that the bachelor's degrees that your guys are going and getting, the first year jobs are drying up. So you need to think in a logical way. You need to understand as to why university from a historical context has been important, how to replicate the good stuff and get rid of the bad stuff, because now you're going
How
to
to
have to be
replicate the
very,
good stuff.
you got to be very picky, understand what real value proposition university is actually giving you, and be specific, like Rav was expressing. Find out exactly where you fit in the economic puzzle. Where do you provide value, and how can you leverage that to benefit yourself at the maximal rate? Because the truth of the matter is, there's a hurdle rate, there's an interest rate, and every single year there's economic numbers. They play this game. The banks will pick you off if you become a liability. The banks will start to befriend you if you become an asset. If you take out debt and you pay it off, there's a game being played, and you have to know every single piece on the chessboard. You have to know that universities benefit more than you do when you go and get a degree now.
Mm-hmm.
The,
It's
the,
very
the,
true because
the,
there's no limit to the amount of money they can make. And guys,
do
so
not
we're gonna end. Yes, sir.
last thing,
Yeah,
just
yeah,
to
yeah.
tie
No,
this up.
yeah, yeah. No,
Do
continue.
not become the product, and know when you're no longer the consumer.
Mm-hmm. Oh, I like that. No one, a consumer. So, guys, I'm gonna just give 2 more tips. That's it, and we're gonna end this pod for 47 minutes. If anybody watches this, thank you very much. We really do
Thank
appreciate
you,
it, and we hope you guys get
yeah.
something from it. But 2 things: a lot of
Yeah.
people might see that I refer to a lot of people as poor people here, and it's not because people are poor, but I'm gonna refer to why we refer to people as poor in this one. Most rich people, I'm sorry to tell you, are not going to be worried about student loans because they probably won't have any student loans. So this does
No,
not apply to them. This applies to the people who have no money. They're trying to fucking get on with their life, and they're trying to figure out the best course of action, and they're going to do something that might be a grave mistake down the road. Because the people with who have a lot of money from their parents or however they have the money, they're not worried about their student loans.
Yeah.
Exactly.
Yeah, but what's happening right now is there's a huge divergence between the rich and poor. The middle class is collapsing into the poor.
Yeah.
Would you agree?
Yeah, and that's why
And so
you need to make sure. Yeah, exactly. Which is why you need to make sure that's happening. But also, guys, now one last thing, guys, please take something from the video. And again, if you took anything at all, no, we really appreciate it. But yeah, we're gonna end it here. We have a lot more things to say, but we'll continue this in the next episode. So have a great rest of your day, guys.
Please leave some comments if you guys think that we can reiterate the value propositions and concepts that we've mentioned. Anything that you guys Put references like Robert Kiyosaki, put references that you've read. Show us. We want viewership that is constantly, recursively seeking intrinsically valuable education,
As well,
self-education,
we're learning too, right? So we might pick up.
self-education.
Yeah,
Yeah,
and
I
okay,
listen to Rad read so much.
great last point to say, Ahmed, because I'm gonna just
What's
refer to
the
this
book
is you don't
before we
even
leave?
for Tony Robinson.
What is the yes?
Yeah.
You know exactly
The
what
best work is The Holy Grail of Investing. It's one of my favorite books. Ahmed is I'm reading as well, so you guys can follow along. But guys, last thing, this exact Ahmed just reminded me about it is education also does not cost anything anymore. So if you want to learn anything for free, you can do that as well. It is feasible,
Or you could
possible,
pay for it.
definitely.
You could pay
You can
for it
pay
too if you want.
Yeah, you can pay
If
40
you
grand
want,
or
you
learn
can.
it for free. So guys, don't let money be the reason why you're going to be stuck in a position for the rest of your life. But guys, thank you very much for everything. Have a great rest of your day, and we'll talk to you guys next time. Bye bye, guys.